everybody, it's Jessica Stone at Stansberry Research, and I'm joined now by Scott Garliss, the editor of the Stansberry Newswire. And Scott, there is a direct relationship that you're writing about between oil prices and what happens at the banks. Of course, we've seen huge swings in oil, a historic negative more recently. What has been the impact of those swings on the banks?
So it's going to help bank balance sheets. Basically, a lot of the banks, especially the large cap financials, lend to people in the oil industry. Refinitiv Data had some data points out the other day talking about how by 2025, there's about $100.7 billion worth of energy-related debt coming due. Now, when oil prices went negative around the April oil contract expiration, so people were concerned that companies would walk away from their financial obligations with their debt. Now, as oil prices have bounced back, they're not as worried about that. Again, by 2021, only $7 billion worth of that debt comes due. So there's a lot of time for oil to recover before the bulk of that debt has to be paid off. Why that's important for the banks is their balance sheets start improving and they're less worried about having to take write-downs or charge-offs related to oil company bankruptcies.
So banks are doing better because they're not worried about losing money to bankruptcies in the oil sector. Is that
correct? That is right. And so the other thing here is the large investment banks get a lot of banking fees off of the oil companies. So again, what we'll see there, why it benefits a little guy, is these banks like JP Morgan, Bank of America, Goldman Sachs, any lending they do to other guys, they're not going to nickel and dime people to make up that lost revenue if all of a sudden oil companies can't raise debt.
Okay. And, not all of us are customers of Goldman Sachs and JP Morgan Chase. Will it trickle down into the experience that I have at a Wells Fargo branch or at a BB&T?
Yeah. I mean, where it's going to trickle down is all of a sudden, if they're writing back up some of these loss provisions they've taken and that money's coming back onto the balance sheet, that means they have more available capital to lend. So let's think about it in terms of supply and demand. If they're taking charge-offs and write-downs, that means there's less money to lend. When there's less money to lend, it's going to cost more to borrow. But if they don't have to take charge-offs or write-downs, that means there's more money to lend. And when there's more money to lend, it's going to cost a lot less to borrow. That means it's going to be easier for individuals to get credit and spend.
Yeah, this is something you're very passionate about following in terms of the economic recovery because of the relationship there. In terms of investment, though, how should we be looking at this for investment? How can we make a profit off of this observation?
Well, I think the way we'd want to do it is you could look at a couple of things. You could look at energy ETFs for an economic recovery because as the economy recovers, oil demand keeps going up. And at the same time, you could look at a financial ETF because, again, as oil goes up and the financial balance sheets improve, that's going to be better for all of those stocks. Ways to play that would be look at the S&P Select Sector Financial ETF, XLF. Another one would be the S&P Select Sector Energy ETF. That is going to be XLE. You could also look at the iShares Global Energy ETF. That would be more of a play on Brent crude, which is a little bit different than West Texas Intermediate crude, which is more U.S.-based. But all of those should benefit as oil prices and the economy recovers.
It's remarkable, even as a lot of the globe tries to get off of its oil reliance, how much oil still matters in our day-to-day life and lending. Thanks so much, Scott Garliss, with those observations and bringing them to us. And if you would like to see much more content like this, please subscribe to our YouTube channel. You can also find us on Facebook, Instagram, and Twitter. That's all for now. Thanks for joining us.